I want to tell you about the Secure Act, which just passed through Congress at the end of 2019, and there's 5 major changes to individuals and 5 major changes at the corporate level. Number 1 for individuals is RMD age, required minimum distribution age, has now changed from 70 and a half to 72. And that's effective January 1st, 2020. If you've already started RMDs, you got to keep going, but if you haven't, then you don't have to start them until you're age 72. Number 2 is they changed the stretch IRA. This means if I passed away, and what they kept the same was if my wife receives a beneficiary IRA, she can actually roll my IRA into her IRA and take required minimum distributions or not based on her age. Now you could do that with any other individual. I could give it to my kids and they would have to start taking out distributions based on their age or my age, depending on if I'm already taking distributions myself. But what they've changed is now you have 10 years as a non-spouse to take out the money. If you inherit a $1 million IRA from your parents, you have 10 years to withdraw it and pay the taxes on it. If you're a minor, you don't need to. You can still stretch it out. If you are disabled, have a terminal illness, or if you are within 10 years of the deceased's age. So if I'm 80 when I pass away, if I am giving it to a non-spouse, non-minor that is 75 years old, say my brother or somebody like that, they would also be able to stretch it out over their lifetime and not take it out in 10 years. Number 3, the next biggest change is IRA distributions are now up to $5,000 are penalty free if you have a child or adopt a child within 12 months. So if we have a child, we can take $5,000 out of our IRA. We still pay the taxes on it, but we don't pay the penalty that would normally be associated with that. It's an additional tax penalty free option, a hardship withdrawal, essentially. Number 4 is you can use up to $10,000 to pay down student loan debt from a 529 plan. 529 is your college savings plan. In the event you have a 529 plan that has money in it, say for another sibling of yours, it can be used to pay off student loan debt up to $10,000. And the 5th item on the individual level is the kiddie tax. In 2018, they passed the new tax law, and it changed the kiddie tax where you had a low tax bracket for the first couple thousand of unearned income, and then after that you jumped up into a trust level taxation, which is much higher than most people's ordinary income tax. This law reverted it back to say, nope, after you go to that low child's tax rate, it goes to the parent's tax rate, which makes more sense because that's typically how the money is getting passed on and why a child or a minor would have unearned income is from a gift from a parent or family member. So it makes far more sense this way, and they've made it where you can retroactively correct your tax returns for 2018 and 2019 if it's relevant and worth paying the CPA or the accounting trouble to get it done. Now, very quickly, there's 5 changes on the corporate side that occurred as well in this Secure Act, which just passed right before Christmas in 2019. The first one is if you auto-enroll for a new 401k plan, if you auto-enroll employees where they automatically have to contribute to the 401k plan unless they opt out and check a box saying, no, I don't want to contribute, then the government is giving you a $500 credit, that's direct dollar for dollar benefit against your taxes for the first 3 years. The other change, number 2, is they have the auto-enroll. You can auto-enroll your employees up to 15% of their income, which is a very high amount, but it gives that company the flexibility to do so at whatever rate. And certainly a new employee coming on later, if they're auto-enrolled at 10 or 12% of their income, they may or may not notice that in their paycheck, depending on their pay versus their previous job and a number of other things. It's a way they're trying to encourage people to save for retirement. Number 3, multi-employer 401k plans. The most likely place I see this is an association, or maybe even a chamber of commerce, although that would be difficult. But certainly an association could create a 401k plan, and all the members of that association, the company members and individual members, would be able to contribute to the 401k and get the benefits without having the administrative overhead of a small 401k plan for a small business. Makes it a little more appealing to a small company to say, yeah, we want to participate, we want a 401k, but we don't want to pay a couple thousand to administer it. We just want to tag on to our association that we're already a member of, and maybe there is a cost, maybe there isn't. We'll see how that works out over time. Number 4, companies that create a 401k plan and have an annuity inside of it, or annuity options, are not liable for doing so. In the past, annuities have been seen as bad and not good inside of a 401k plan, and the government's basically taking a complete shift the other direction and saying no, they're perfectly acceptable and they're just as good as anything else, and allowing companies and protecting them from liability so employees can't sue for that where they in a place where they normally otherwise wouldn't be able to sue for stocks or bad investments. And the 5th thing is a very interesting one. In a 401k plan, normally a company can limit participants to only have it. You have to have 1,000 hours of work. You have to be 21 years old. You have to. But now they've changed it where you can be a part-time employee with only 500 hours of work for 3 years. So there are a handful of scenarios where I can imagine someone who works for a company part-time gets at least 500 hours a year of work and has done so for many years. It's not just like a part-time temporary position. And when you do that, normally you would be excluded from the 401k plan. But what they're coming out with is saying, no, going forward, that participant can be involved in the 401k plan if you show 3 consecutive years of 500 hours of work or more. Before it was 1,000 hours in any given year. This doesn't take effect until 2021, and therefore 3 years means the first employees to truly be affected by it be 2024. But it's in the law. The Secure Act passed both houses of Congress and is effective now, but it won't truly be implemented over the next 4 years. That's it for today. That's the Secure Act passed by Congress in December 2019. This is Justin Struble. I'm not a broker. I'm a fixer. Thank you.